Hello there. With the Q1 2024 results for the gold miners coming up soon, let's have a look at another couple of miners, in this case Harmony Gold and B2Gold. This is based on the Q4 results for 2023. And welcome to myfinanceteacher.org, where we do discuss a range of assets, including the general stock market, precious metals, including some critical metals such as nickel. By the way, I've just posted this best nickel report on the web. Make sure to check that out. And of course, for that and much more, you'll have to join us at myfinanceteacher.org. Simply do that by clicking this Join Now button. Coming back to our fundamental valuation for a couple of miners, as usual, the valuation factors we consider is of course the prices of those precious metals, reserves and resources in the ground, costs of extracting those resources, that's all-in sustaining costs. We'll look at debts, taxes, shares outstanding, we'll look at the value per share, taking into account the time value of money, as well as a little insider source on insider shares. And with all of that consideration, what we arrive at is the discounted per share value after all-in sustaining costs, long-term debts and taxes. As you see, this is not an exhaustive list of factors to consider. For example, we don't really look at jurisdictional risk or management experience. Nevertheless, while from day to day or from week to week the actual share price might fluctuate quite a bit from this valuation, in the longer term though, it does tend to reflect these valuation factors. So let's start with the reserves and resources in the ground. For Harmony Gold, we have nearly 26 million ounces of gold, that's proven and probable reserves. They also have nearly 47 million ounces in measured and indicated resources. What we look at here in general, resources are exclusive of reserves, that's M&I on top of proven and probable reserves. Beyond all of these numbers, these two miners would also have inferred resources, but we don't include them into our valuation, making this valuation that much more conservative. Harmony Gold also has a little bit of silver, under 17 million ounces of silver in reserves and around 30 million ounces in resources. And Harmony also has a substantial amount of copper as well, over 5 billion pounds of copper in reserves and nearly 3 billion on top of that in resources. B2Gold though only has gold with reserves at over 8.2 million ounces, and on top of that M&I resources at over 11.4 million ounces. As usual, we're going to look at the value of those reserves and resources in the ground for three scenarios for gold price, with a conservative scenario plugging in $1,700 per ounce, balanced scenario plugging in $2,000 per ounce, and optimistic scenario plugging only $2,300 per ounce. So as you see, the current price is actually above optimistic. So in these valuations, we do try to lean quite a bit toward being conservative. Plus, in the ongoing environment for the miners, this would reflect underperformance of the miners versus gold price itself. Moving on to the costs, debts and taxes, Harmony Gold has relatively high all-in sustaining costs at about $1,480 per ounce. Both of these miners have relatively low debts at $192 million in long-term debts for Harmony Gold and $176 million in long-term debts for B2Gold. B2Gold has a relatively lower all-in sustaining costs at only $1,390 per ounce. As for taxes, to keep things a bit simple, I just assume a flat tax rate of 25%. Next, moving on to per share value as well as time value of money, Harmony has nearly 620 million shares outstanding, with insider shares 0%. A large percentage held by insiders is actually a good sign, as it allows to align the incentives of the managers with those of the general shareholders. Looking at the reserves versus current annual production, proven and probable reserves would last for around 18 years. If you add only half of M&I resources, together with the reserves, they would last for around 24 years. For B2Gold, we have 1.3 billion shares outstanding, with 0.83%, that's nearly 1% of those shares in insider hands. Reserve life at current annual production is around 9 years. Adding half of M&I resources would extend the mine life to about 12 years. The discount rate we're using in this valuation is relatively low, it is at 5.5%. As I mentioned, it is relatively low, especially given the relatively high interest rate environment we are experiencing right now. But perhaps during this year 2024, the Fed might decide to cut the rates a couple of times. Finally, with all of this data in mind, moving on to the conservative valuation, where we, remember, plug only the price of $1,700 per ounce of gold, and in this conservative valuation, we only look at the value of proven and probable reserves in the ground, without taking into account any of the value of the resources, that's M&I as well as inferred resources. That gives us quite a conservative valuation, sort of a risk level, what you might expect if gold price just drops out of bed here. That gives a valuation for Harmony of around $5.9, and for B2Gold, that's about $1.06. Moving on to our balanced scenario, we plug in the gold price of $2,000, and even in our balanced scenario, we still look at the value of only reserves in the ground, without looking at M&I resources, never mind inferred resources. That gives us over $14 for Harmony and around $2.16 for B2Gold. Next, most excitingly, let's look at the optimistic valuation, where we plug in the gold price of only $2,300. In this valuation scenario, we do look at the value of the proven and probable reserves in the ground, as well as only half of M&I resources, that's measured and indicated resources, never mind any of the inferred resources. So even our optimistic scenario, as I mentioned a couple of times already, does lean towards being relatively conservative. With these numbers plugged in, what we get is an optimistic valuation for Harmony at about $35.4 and B2Gold at $5.24. If you compare these valuation numbers to the current share prices, the share prices are somewhere between the balanced and optimistic scenarios. That's despite the fact that gold price is a little bit above $2,300 right now. Again, that reminds you of how much miners have actually underperformed versus gold. And I do think that if over the next year or two, gold does stay convincingly above $2,300, that might attract generalist investors into all of those large and later on medium-sized miners, helping them to catch up with gold price and perhaps produce some overperformance. That's mostly it for now. Let me remind you that for much more detailed and regular updates on a range of assets, you're going to check us out at myfinancesteacher.org. Have a nice weekend. Bye-bye.